Okay, I sent that out over Twitter. Please let me know if there was an issue with getting it. Okay, thanks, Mike. I will get that corrected. In the meantime, if everyone could just go to my the regular Twitter handle, Trade and Perform, I would appreciate it. So let's go back to discussing this, and then in 10 minutes I'll send everyone the file. Okay. So prior to Janet Yellen speaking, I'm not taking a short. Pretty straightforward. I'm willing to after her speech, I'm willing to take a short here, here, and this 1878 to 1880 level. Okay, and where I'm looking for specifically in these areas. Okay, so in this zone in particular, really, if I was going to adjust this zone and I didn't have it at 2 points, I would make it something closer to. So I'm trying to help people with trade location, right? And when you want to nail it just perfectly, I would probably try to nail it back at 1879. Okay, now. There's two problems when you try to nail a trade perfectly. First of all, sellers step in front and everyone else sees it just like we do, right? You end up falling short and you get responsive sellers before it gets there. The idea with the 2 points is that I can't get it perfect every single time, but I can get it close. And so, at any rate, I will be taking a trade probably up here at the front of the zone. I don't have much of an issue with that. I will take a trade into this area, and I will take the front of the zone when we get up here. What will cause me not to take this trade? Okay, so if you look, what we're probably going to have going into this speech is something like this with an upward bias. Then right in front is my guess is we're going to drive up somewhere in here between the white zone and this yellow zone, right? So after her speech, right, forget what's happened at that point. Go find the bar that's either 5 minutes in front of or at 9 a.m. And if that bar looks like this, or it's 5 to 7 points up, or a series of bars that look like this, okay, and whichever bar that is, the 5 minute doesn't clear below, treat that as an open drive higher, okay, if you see that. And stand aside and give it time to expand. If it fails, okay, we'll have plenty of trading opportunities in there. But don't step in front, right, if she says something that really pumps the market. Conversely, right, if she mentions anything about bringing in QE faster than what they're bringing in, we're probably going to get a sell response. And that sell response will look like an open drive lower from 9 a.m. and it'll come down just like that. Don't step in front of this, and the way you avoid stepping in front of it is simply wait 10 to 15 minutes after she starts her speech. You'll know if they're going to jack it strong in one way or the other. You just don't want to get your ass kicked early in the morning by Janet Yellen, right, when she starts an open drive lower or open drive higher. I don't know how long she's going to testify. Is it all morning? Does anyone know? I dread having to figure out what's going on in the news. All I know is it'll make it harder at that hour, okay? So after 9:15, let's call it, right? If it's the first time into the zone, I'll take a short here, here, and here, barring the price action that shows me there's no rotation or there's no counter rotation, right? That's the only way I would call a short off in any of these zones, and I will call it out if I see lack of rotation. But what that looks like is if the market's going up 7 points and only comes back 1.5 points, why do you want to trade that? That sucks. That's not good price action. So don't sweat it. Also, okay, on the downside, there's no zone in here because everything from here down to here, okay, is poorly auctioned, which is why we went to 1871.50 so easily, because it's the first place we have structure, okay? If you look underneath, okay, down here, this was somewhat auctioned. It was okay. Not a ton of volume went off here, and we still have all of this. Here, I want to show you. This is easier. Instead of explaining it, people can see it easier when I do a larger chart, okay? Okay, see how this is by definition poorly auctioned, okay? And what we were doing here was re-auctioning this, okay? And once we got done re-auctioning it, so this is well auctioned, as you can see from yesterday, and then we rip down this area from here, which is essentially 69, I'm going to say right down to 66, is poorly auctioned. Okay, so normally there would be a zone here. There's not. Okay. Additionally, we're still poorly auctioned. It re-auctioned it, but not very well and not on a lot of volume. Okay, so that means that still, once we get underneath the 66, we can still fall through quite easily. And the first area I think it's going to want to test before we find real responsive buyers is going to be the very bottom of this candle, which is 1860, right? But if you look on a bigger picture, okay, all of this, I'm going to say from here on down, okay, all of this is truly poorly auctioned all the way down to about 1840, and there's an open gap at 1839 and change that's begging to get tested. What that means is, yes, it may not necessarily go down in a straight line, right? It'll come through and get price action like this, or it can have price action like this. Either way, okay, you end up with responsive buyers or people who are attempting to step in front of it. They keep getting drilled down. Why? Because the market likes to re-auction areas. On the upside, right, we're opening at this 1871 level. We're well auctioned right up to about 1874. But above 1874, the auction looks pretty crappy. It's okay, but it's not great, and there's not a lot keeping us from going to 1885 if the news is really good. The problem that we're having with breaking out to the upside is that, first of all, everyone wants it to break out to the upside. And the second part about that is if you look on the volume profile, which we'll do. Here, let's get rid of all this crap. Okay. As I've been emphasizing for the last couple of days, is that we are consolidating at the top of the range. This right here, this 1840-42 area, has been the bottom of the current range, okay, and it was the bottom of the old range. It broke out below, and then it's been extended down to this 1810 to 1800 level, right? There's something at 1799 that, and there's an open gap down at 1786. So, if you're trying to get long at 1880 to try to push us to this 1900 area, usually the way this works is on a gap above. Okay, we gap and then we go. That's normally the best breakouts. It doesn't have to work that way, but this is normally what you want to see, or at least a gap. Let's say we closed here and then we gap right to the very top of the zone, and then we break from there. One of the two, gap out or gap to the top with a follow-through break. That's not happening, and the reason why it's not happening is because everyone wants it to break up, but you have a drag from NQ that's losing its leadership, and that's why we're getting this choppiness, okay? And the most logical answer is you have a group of bears that say we're going to crash. You have a group of bulls that say we're going to move to the upside, and the most logical thing for the market to actually do is do this, right? Because this will frustrate the most people, right, and cause the greatest amount of damage. Also, if you look at the underlying damage, I was reading last night, actually fairly shocked. Some traders that I know that are actually really good traders have gotten murdered in momentum stocks. I didn't realize how bad the carnage was, but it's been significant. I've seen guys that I actually respect that are down 30 and 40% for the year, and that's really hard when ES is still sitting on top. So I'm not bullish or bearish, right? I know that if we lose this 1860 level here at this point, that we have a lot of room down. First down to this area, then down to this open gap, okay, and then we have a little area just under 1820, 25 and 24 to 26 areas still support. And then you have this 1810 to 1807 roughly, without being specific, 1799 to 1801, and then I believe at 1786 there's an open gap. If we even get anywhere close to that, I'll pull it up, but I don't think the market's crashing today, so I'm not going to worry about it. That's the larger picture, okay? And then if we get above this right here, right, really all of this from 1880 up to 1892 is, again, poorly auctioned and could be easily broken through. It's just the sentiment isn't there, and again, normally what we want to see is just a gap to here or here and then have it break. Okay, so let's talk about on the downside where I'm looking to get long. Okay. There we go. So now that I know that below Tuesday's low, right, we know that we'll probably get responsive buyers off of Tuesday's low. It'd be a nice fat rotation down there if it gets in there. I will be taking a trade the first time in, assuming that we hold up prior to Janet Yellen speaking, right? Again, this is all after essentially 9:10, 9:15 area, right? First time in, I'll take a long to the upside. I am cognizant that this is poorly auctioned, okay? The only way you can take a trade in here and be sure that it's going to rebound is simply be willing, in other words, participate in the rebound, is to be willing to take the 2-point loss. This is really poorly auctioned in here, okay? I imagine it'll slow down here, but not a lot of volume went off in this area. Okay, so I'll take a trade here, and specifically I'm going to target 1862. The zone is 1861 to 1862.50, but specifically I'm going to target Tuesday's low and assume we're going to test somewhere between Tuesday's low and Globex low. Okay, normally the zone will be pushed up just a bit, and then it is possible that we'll come right back and auction this last little piece and then get the rebound. Therefore, that's why I'm pushing back to the 1861 3/4, 1862. 2-point stop below puts me at 59, and I'm willing to take that 3 to 4 point risk in this area. Okay, below here, the only rule I'm going to have is if we break these lows, right? This is a single point of support. This 1857.50. It's going to work just like yesterday's single point of support. Normally, I would have a 2-point zone, right? It would go 1859.50 roughly. Okay, so the first problem is it's stacking up. I don't want to stack up the zones. Secondly, it's poorly auctioned. So what I want to do is I want to treat this as if this existed, but I'm simply targeting the very back of the zone. That's how I'm going to treat this area, right? I would like to see a 1-minute tick divergence to take this trade at this area, okay? Also, if we get responsive buyers, I'll be looking to recapture the Globex low and Tuesday's low. I'm really going to need to recapture Tuesday's low in this particular case, right? And close above on a 5-minute bar. If that occurs, I will look for us to travel back to the other end of the range, or back at least towards halfway back towards of Tuesday's high, right? Essentially, this white zone would be my ultimate target if we could achieve that, right? So obviously, I scale through there. I've gone through with my clients how I handle the trap trade. But that would trigger a trap. It's got to get out of here and get my 2-point scale in less than 15 minutes, or I'm out of this trade. Okay. Same thing down here. There is a support level, but this was this 1853, 1855. But once again, if you go back and look at that area, which we can do really quick, okay, very poorly auctioned, and it could simply be one of these things where we sit here, re-auction this area, try to get back up, or just sit there and then move lower again. 15 minutes or I'm gone. That's pretty much my rule there. I do not want to step into poorly auctioned areas because you get what you had yesterday afternoon. Below here, you'll notice that there's a significant difference between 1855 and this 1844.46. Okay, it's possible that we find responsive buyers at 1847.25, and so the reason why I put the zone like this and say 18, I want to explain. We may get responsive buyers here. If we do, I will probably miss it unless I get tick divergence right there. But essentially what I wanted to do was make the zone from here down to here. Obviously that's a huge wide zone and not very useful to me or anyone else, right? It would essentially add another 1.25. So what I'm doing instead is I'm targeting somewhere in this 46 to 44, and I need tick divergence. Realize if we get down here, okay, this zone below is begging to get tested. The reason why I'm focusing on this area is this would be a very nice stretch from 55 down to 45, and would likely generate a responsive buy back up. Okay. However, I don't know necessarily that it'll hold, and it's possible the second time in that we roll through and we come for this open gap. So just to reiterate, taking a trade here, it's going to take, it has to take in less than 15 minutes or I'm gone. Same thing here, 15 minutes or I'm gone. It's possible that we miss this zone. I just put this out there for my more advanced traders. Be aware, it's possible that there's responsive buyers there. I'll miss this if it happens, unless I just see outstanding tick divergence on 1 minute. And also, if I take the trade here, I'm going to be aware that I still need a 2-point stop behind here. That's the proper stop for this area. Okay, I simply don't want to take a 5-point stop in this area, and given that it's all poorly auctioned, I'm going to give the sellers the benefit of the doubt to be able to push down into this area. Okay. Lastly, I will stick a trade at this 1841 to 1839. It'll be a little bit smaller size because I'm going to use actually, let's see, 34, 41, 4 points. It's actually going to end up being a 5-point stop from the front of the zone. So I'm going to adjust my stop slightly, right? And I'd like to try to push back specifically to this, towards this 1840, 1839 is specifically where I'm looking in here, which means because I'm focusing on this area that I may miss the trade, right? It may come off the top and just rebound. And also if it does this, in this particular case, and then comes back here, this is one of the rare times, I will definitely, whether it's the first time or the second time, first time into this specific area, 1840 to 1839, I am taking a trade no matter what, and I will use, if it's the back of the zone, I will use the advantage of being able to get into the back of the zone, and I will use a 4-point stop behind. That's a pretty good chunk of change behind that zone, but open gaps generally create large reverses, and it's quite possible that we could have a 10 or 15 point reaction from this point. I'll still scale my 2 points, but I'll only scale a quarter of the position. And at that point, once I get my 2 points, I'll move my stop to whatever the swing low is, and then that's where the stop will stay until I either get 10 points, right, which will be, let's call it 7 to 10 points. I'll start scaling more sizably, and then I'll leave the last quarter of my trade until the close, whether it stops or it takes off and we get squeezed at the end of the day. This is a significant stretch. It's perfect to find responsive buyers. I really like this area, so that's how I'll be handling it. So again, just to reiterate one more time, 2 things. For those of you that are new on the call, I'm not a trade caller or a trade calling service. I don't just simply go, I'm buying at 1839, I'm selling at 1855. The point is to teach y'all how to do this for yourself, simply because I don't know how long I'm going to want to do this for, right? And simply handing you the trades doesn't do any good. What I'm trying to teach to all my coaching clients, and as I make this room, I'll convert this in the next couple of weeks into a paid-for room. The idea is to coach y'all through so that you can make your own trading decisions for yourself, and you don't need to subscribe to any one service. You'll be able to read the price action and the structure, right? And then as long as you can actually form a trade plan and stick to it, which is actually the harder part. Getting the structure is easy. Actually getting a disciplined trade plan is the harder part of this deal, right? But if I just disappear overnight and decide never to publish another chart again and just trade for myself like I was before, my goal is, at least for all my coaching clients, they can do this on their own without my assistance. So that's the lay of the land. I'm obviously going to stay out of most of this area. I'm looking at the extremes from the range yesterday. Be mindful of gap fill, right? Do we hold above or below? Do we open drive higher or lower? And then notice, okay, it would be a change in what is expected. Normally we've been getting a move up like this into Janet Yellen, okay? If coming into 9 a.m. we are tanking like this, that is a change in character, and it's good information. It means sellers are much stronger than they were anticipated prior. Sellers are much stronger, right? Usually they would wait at least until after she had something to say before stepping in. So if it comes at 9 a.m. and we're tanking, right? First of all, it still would be a dangerous trade. She could just simply say anything that would have to do with benefiting QE, and we would shoot up, straight up. It would be a very hard, fast move, right? But conversely, if she doesn't change her storyline at all, right, and we are pushing down, we could certainly get a rollover. That 1840 area is begging to get tested, and I'm really trying to leave trailers on my shorts in this area to get down into that 1839, 1840 area. It's not that I'm bearish, it's just looking at it from an auction standpoint, okay? On the long side, if we get down, again, I'll leave those trailers. I can't reiterate the time issue is important in this thing. 15 minutes. This has to work in 15 minutes. I'll give this zone all the time in the world at once. I'm willing to lose at this zone, meaning I will disregard even the 25-minute rule. It can take an hour. I'll wait for it here because I know I can get pretty strong responsive buys back to the upside. The only reason I won't take a trade here, by the way, guys, is if there is consolidation right above the zone like this before we get there. Okay? If it does this, what I will want to see is when it breaks, I don't want to step in front when pressure is built, right? So if it breaks, I won't take the trade here, right? Instead, what I want to see is can it get back above and hold where the consolidation point was after testing the open gap, right? If so, I'll take the trade there, and then I'll make the stop whatever the swing low was. And that's how I'll handle that. That'll be the only audible in this particular case, and I'll call it if I see the consolidation in front. It's not very hard to see, right? And it really has to be literally on top of the zone. If it consolidates up here like this, I'm still all right taking it at that 39 and a half level. I'm still very comfortable at that point. And if we get below here, guys, it's going to be ugly, okay? And I have these zones, this 1835 and 1832. What time am I? I'm going to finish up in just a second. 1835 to 1832 and 3/4, then 1830 and 3/4 to 1828 and 3/4. Okay, I made these thin intentionally. And the reason why they're thin is because they are very poorly auctioned. They are support, and there's some things to base off of, but there's really nothing till 23.25, and bigger support comes underneath there. But this would be a ginormous move. I just don't expect to get in here. Maybe tomorrow, but certainly not today. Okay, and everyone and their brother's waiting for this 1839, 1841. Don't be surprised if they step in a tick or two in front of that open gap and push out of it. I don't know a single professional trader that isn't waiting for 1839, 1841 right now. So anyways, guys, I've got it. People are having a hard time. When Paul Tudor Jones, he's probably the best trader of our lifetime, right, as far as day trading and swing trading goes. When Paul Tudor Jones says this is the hardest macro trading environment he's ever dealt with in his career, that's a significant statement. The man's used to making billions of dollars from his trading, and he's having a hard time. So if you get through a day like yesterday and you avoided getting ripped all the way down and taking losses all the way down, that is a gain for you. Okay, that was a huge, difficult day. We normally don't get trend days down out of consolidation like this. They usually begin in the morning. This was hard. Okay, I don't know very many people that actually captured this. I know 4 people that got absolutely destroyed in this. Okay, they were expecting us to rally into Janet Yellen's news. They picked up big positions at the bottom of this range, and they got smoked to the downside. Okay, so if you're surviving, your P&L is positive, you're doing better than, from what I can tell, about 90% of the people out there. Be selective in your trades. Let the market come to you. Don't push any one day. Does not matter. Okay, and then also watch NQ starting to break to the downside. It led ES lower yesterday. I want to see it stay positive and preferably breaking to the upside. It would be nice if NQ could lead us up again, right? But if it starts banging out new lows, even if ES starts hanging up like this, watch to see if NQ is holding on. If NQ starts to break or gets below a major point like Globex high or Globex low and stays there, it's a good chance that we'll get continuation to the downside from yesterday. And I'll call them as I see them. Guys, I'm going to get this out to the TradeStation file out to everyone. Have a great day. I'm sorry I was a little disorganized in the morning. And please understand, my goal isn't to call out trades for y'all. It's to teach you how to do it for yourself. Let the rotations work. Take a deep breath. Yellen's speaking at 9 o'clock. We'll have plenty of time to make money. The market can't keep us from making money. All it can do is get more volatile or less volatile. And there'll be times when it's very easy. And in the meantime, when it's not very easy, right, what you want to do is protect your capital so you're not digging out of a hole, even if they're small gains, so that you're not digging out of a hole when it gets easy and you're just padding your P&L. So we'll talk later. You can reach me at tradingperform@gmail.com. Have a great day, guys.